Hey, how you doing? Russ Robinson here with Stokes and Company Real Estate Services. Just wanted to reach out to you today for a few moments and talk to you about what I think's going to be happening with home prices here in the near future. Some of you know, been hanging out at the Orem Farmers Market on Wednesday nights. Perhaps I've met some of you there, and a lot of people stop by and say, "What do you think's going to happen to prices?" And really, should I even be considering buying a home right now? And just want to give you a few data points to help you see that investing in a home is still a great thing to do, even in spite of the rates right now. And one of the main reasons I say that is because it's pretty much agreed that home prices are not going to be crashing anytime soon. They're not going to be going down. In fact, nationwide, we're seeing data coming out. Some of them recently showing the new 2023 pace as of what's going on today in this month, but FHFA is showing that we are on pace right now to 7% appreciation this year. CoreLogic showing 10%, Black Knight with 5%, and Zillow showing 10% appreciation projections now through the rest of 2023. And with that said, I mean, we've got conservatively a 5% appreciation average going on. And so, home prices are still going up. And one of the things I want to help you understand is, especially for those of you who are wondering, why are things so different now than 2007, 2008, when the bottom just fell out of the housing market and things crashed? Well, let me just tell you a few things. First, in 2007, there were 4 million homes on the market for sale. That's a big deal. Just to put that in perspective, today we only have 1 million homes on the market. Another thing that's important to think about is we have today versus then in 2007, we have 34 million people in the United States than we did back in 2007, which created this bubble. So the way we need to think about this is we have still historically low inventory. And what we've even been observing out at the farmers market when we're just talking to people week in and week out is there is a huge pent up demand for homes. I mean, everybody is saying we just want to wait and let the rates come down a little bit. But with the numbers that I just gave you, again, 34 million people, a lot of them are just now forming family units. Family units want to buy houses. Builders aren't building fast enough. All of these factors going into it, only 1 million homes on the market versus 4 million then. What happens is when the rate goes down, even by an eighth of a point, you get more people entering the market to buy. And when you have low inventory, it can only do one thing. It makes the home prices go up. We are still seeing, homes that are priced well here along the Wasatch Front having multiple offers quite frequently. I mean, I'm seeing this with buyers. We have to put in really competitive and good offers, but it's not the same as it was a year, especially even 2 years ago, where people would have to make 20, make offers, 20, there's 20 people offering on the same house, is what I'm trying to say. So, all that being said, it seems like it's a good time to buy if you can afford the payment. Now, we understand that's a big deal. And so I'm not endorsing, going into a payment that you can't afford. But I would say if you're able to stretch just a little bit right now and make a payment that even though it may feel a little bit tight right now, I've been saying this to everybody who's been buying recently with me who I've helped understand this. I really believe you're going to look like an absolute genius here within the next couple of years, and especially in 5 years, because we really do believe, and most economists believe, that we've got nothing but home prices that are going to continue to increase. I'd like to say they will increase gradually, but even with the data I've just shared with you from FHFA, Black Knight, and Zillow, I mean, CoreLogic, 10%. I mean, you've got high appreciation that's still going on nationwide. So I'd love to be able to help you in this market, love to be able to answer any of your questions that you might have. Again, I'm here to serve you. I want to help you do what you want to do. But I would say if you're somebody thinking about buying, again, if you can do it, I think it's a great time to do so while there's still a little bit of breathing room here along the Wasatch Front. I mean, we are seeing people being able to put in offers and have some negotiating room, be able to have some due diligence and things like that, especially if the home might be priced just a little bit higher than it should and not adjusted for the current market. But also, if you're thinking about selling, I really do believe it can be a good time for you, especially if you're wanting to make a move up. Again, I know there's that 7% rate, but even have some things. If you're wanting to hang on to that 2.75 or 3.5% interest rate that you have right now, we've even got some solutions. Love to help you think through those. If you're wanting to make a move, but you don't want to lose the rate that you have right now, there's ways that you can tap into your equity to make a move and still take advantage of the benefits that you have right now and not wanting to lose that interest rate. So, again, if I can help you, please give me a call. Reply on the email if you're getting this through that. Hope you have a great day. Love to talk to you soon. Thank you. Bye bye.